Bitcoin just ripped 20% in April to $79,000. But the data underneath the rally is screaming something nobody on Twitter is admitting. And honestly, that is barely scratching what hit the wires today. We have got Bitcoin's suspicious 20% rally where derivatives did all the work. U.S. national debt crossing $39 trillion for the first time since 1946. Spot CVD exploding 199% at a single week. Shiba Inu sitting on the edge of a major resistance break, and a South Korean court handing Bithumb a lifeline that changes the entire Asia regulatory picture. And look, the one I want you locked in for is Story 5, because the Bithumb ruling has implications for every Asian exchange that nobody is pricing in yet. I am moving fast today on Crypto in 60. Let's start with the rally that does not add up. So Bitcoin climbed 20% through April and tagged $79,000. Sounds clean on the surface, but the CoinTurkin breakdown shows most of that move came from derivatives activity, not spot. Spot demand was honestly weak the entire month. And here's the part that gets me. This exact pattern, is what we saw in early 2021, before the spring blow-off. Leverage drives price up, spot fails to confirm, and then you get a violent unwind. The current funding rates are stretched, open interest is climbing fast, and the realized cap is barely budging. That last metric is the tell. Real money is not coming in at this level. Now, the bull case is that any spot inflow from here lights a fire on top of the leverage already stacked. The bear case is one liquidation cascade and we are back at 72,000 fast. Look, if you want 5 stories like this every morning before markets open, with the contradictions actually called out, hit subscribe. That is what this channel does. Now let's talk about why this rally might have a much bigger backdrop than anyone realizes. U.S. national debt just crossed $38.9 trillion. That is officially over 100% of GDP, the first time we have seen that ratio since the end of World War II. Per news.bitcoin.com, we are racing toward 39 trillion, and there is no plan to slow it down. Now here is where the tension lives. Bitcoin maximalists look at this and say game over. Fiat is finished. BTC is the only exit. The other side, the macro traders, they look at this and say, wait, debt at WWII levels also coincided with one of the longest dollar strength periods in history. Because the rest of the world was even worse off. Both sides have a real argument. So which way does this resolve? Here is the framework. Watch 2 things. 1. The 10-year yield. If yields keep climbing while debt expands, that is when the dollar starts cracking and Bitcoin gets its real bid. 2. Foreign central bank treasury holdings. If they keep selling, the Bitcoin thesis accelerates fast. The next CPI print and treasury auction window decides this. Now to the on-chain side, because something just shifted there too. Okay, so this is where it gets interesting against Story 1. Per Crypto News, Bitcoin spot CVD, that is cumulative volume delta, just exploded 199% in a single week. It went from 18.3 million to 54.8 million. And basically, that means aggressive spot buying is back. Perpetual CVD also climbed in parallel, which tells you derivatives traders are not fading the spot bid. They are stacking on top of it. This is the exact data point that contradicts the weak spot demand narrative from earlier in April. Either the rally is rotating from purely leverage-driven into a real institutional spot push, or this is 1 week of noise before the next flush. So here's the question I want your take on. Are you adding into the CVD spike, or are you waiting for the 72,000 retest first? Tell me where you stand below. I genuinely want to see how the room is positioned. Now let's pivot to a setup nobody on crypto Twitter is watching closely enough. Shiba Inu is sitting right under a major resistance level, and per you, today, the structure is, it is genuinely tight. The chart is coiling. SHIB has been pressing this level multiple times over the past 2 weeks without breaking, and the volume profile shows accumulation underneath, not distribution. Now, when meme coins compress like this, they tend to resolve violently. Either it cracks the level and you get a fast move toward the next supply zone, or it rejects and dumps back to the prior range low. The 50-day moving average is right under price, acting as the floor. Honestly, the part that jumps out to me is that this is happening while Bitcoin is still chopping near 77,000. SHIB usually does not move ahead of BTC, so if SHIB breaks first, that is your retail risk-on signal lighting up before the majors confirm. Watch the next 2 daily closes. Now to the story that could reshape Asian crypto regulation overnight. And here is the one almost nobody is talking about. Per Crypto Potato, the Seoul Administrative Court just temporarily halted the 6-month partial business suspension that regulators slapped on Bithumb. For context, Bithumb is one of the largest exchanges in South Korea, and it is consistently one of the top 3 retail crypto markets globally. The court basically told regulators, hold on, we need to review this before you crush a major exchange. The implications run deep. This is the first time a Korean court has pushed back hard on the FSC's enforcement style, and other exchanges facing similar pressure are now going to use this exact ruling as precedent. Volume that would have fled Bithumb to overseas platforms during the ban now stays in Korea. The won-denominated bid stays intact. The kimchi premium stays alive. By the time Western analysts catch up to what just happened in Seoul, Korean liquidity will have already repositioned, and that is the kind of structural shift that moves prices before any chart shows it. Quick recap. Bitcoin's 20% rally driven by leverage, not spot. US debt cracking $39 trillion for the first time since 1946. Spot CVD up 199% in a week. Shiba Inu coiled under major resistance. Bithumb winning a court ruling that just shifted Korean regulation. Today's lineup tells you the macro and the micro are pulling in the same direction for the first time in months. And that is when the real moves get set up. This is not financial advice. Always do your own research and never put in more than you can afford to lose. If this saved you an hour of scrolling today, subscribe. That is what I am here for. 5 stories every morning. No fluff.